Hello, everyone. This is Yash, a co-founder at Surge.
And this is Michael, CEO at Surge.
Yeah. So in this video, we're going to cover a very important thing about Surge. So it's a two-layer architecture where we have the infrastructure layer as well as the application layer. So what you see at Surge.credit is an application layer. Under the hood, there's a Surge protocol, which is built in a way where we can scale this sooner and onboard more Surge.credit or Bitcoin first companies, like it's a hardware wallet or just a self-custodial wallet, or it could be a Bitcoin first company, treasury companies. There are so many out there who probably taking Bitcoin as a collateral, storing it, like securing it, and now they want to offer Bitcoin services to their Bitcoiners or customers, so they can easily integrate Surge, which will be the Surge protocol. So that's something we want to a little bit deep dive into and tell you more about how it works and what it is under the hood. Like, Michael, you want to share more insights into how it's actually structured and why it's different?
Yeah. So as Yash was saying, there's really like two layers that we're going to talk about today. There's a Surge protocol, and then there's the application layer. So the Surge protocol itself operates not on its own blockchain, but on existing blockchains.
Yes,
so
that's very important.
This is not we're not making a new EVM. We're not making a new Bitcoin sidechain. We're not doing a Bitcoin drivechain or anything like that.
Yeah.
So the protocol itself operates on the Bitcoin blockchain using Taproot vaults.
Yeah.
And on the base L2, which is on Ethereum. So those are the two blockchains we're using. And then we have a communication layer between them that we're calling the distributed custody network. So those three things comprise the Surge protocol. Now, what our software company has done is we've built a mobile app called the Surge mobile app for Android and iOS, and that sits on top of that protocol, and it connects to the protocol. By no means is it the only mobile app or user experience that can be designed on the Surge protocol. It's just one. So it's really our prototype that shows what does a great customer experience look like. And here are some good examples. But you could imagine a lot of other different flavors that other companies could use. We've got the protocol at the base level, and then we're building the app on top of it. And the app is the proof of concept of what can be done. An important thing that we've done with the app is that the app, you can bring your own key to by bringing your 24 words.
Yeah.
Or you can, inside the app, ask to put your private key on a secure enclave, which is a trusted execution environment that we utilize via AWS, but it's connected to the app and it's tied to your email. So you have two different options, basically, to bring your own keys. And that, if you abstractly zoom out a little bit, any wallet provider who wants to integrate will provide their solution to bring their own keys and bring it to integrate with the protocol.
Yep.
So you could imagine a Trezor or a BitKey or a Cold Card. They have a unique way in which they store private keys, and they have a unique way in which they could bring their private keys and their customers to the Surge protocol and interconnect. So there's also so that's the core thing. There's multiple ways to bring your own keys.
Yeah.
But there's also a number of different ways to bring your own user experience.
Yes.
Currently, the mobile app doesn't do fees up front. A lot of companies do points up front. And there are reasons for that. That I'm probably not going to get into right now. But you could imagine a company thinking about doing points up front. Or you could imagine a company like a wallet provider saying, hey, you can use Surge loans or Surge lines of credit. But if you run into liquidation concerns, maybe we'll top you off. We'll top
Yeah.
you off by adding collateral,
Yep.
or top you
Yep.
off by paying down some of the line of credit. And that could be an insurance product. This is actually maybe, it's different. It's different than how Salt Lending's, what do they call it?
Say
Salt Shield.
Salt.
It's a different sort of product than that. This would almost be like an options product, where if the Bitcoin price hit a certain level, you'd get some extra dollars to be able to put into your collateral or pay off the line of credit, whatever. Like, there's so many different user experiences that could be designed. And what we've done is we've shown sort of a minimalist version that other teams will hopefully look at and say, hey, we've got some ideas, some little niche areas that we can build. We'll bring our own keys. We'll bring our users' own keys, and we'll give it a try.
That's an amazing insight. At the base layer, the experience is it's a credit line. You can draw how much you want, repay how much you want, and then the collateral side is the same thing, that you can deposit and withdraw how much ever you want. All you have to do is you have to maintain the collateral ratio, the LTV of 50%. On top of it, as based on your customer segment, based on your customer preferences, you can actually build more user experience, or like a different user experience around this. Like you said, right? So they can do the insurance kind of stuff, or like option kind of stuff, protecting the liquidation for their customer behalf. So I think that's the beauty of it, where as an infrastructure, search protocol is going to enable all that.
Yeah, and it's very flexible. It's much more flexible than just having a custodial product that you're reselling, or a DLC product, which you like maybe reselling. Those are just like very hard, inflexible things that don't sort of like scale well, and can't be like modularized. But our line of credit is so flexible that you can do so many different things.
And then you might be wondering, like, how this is possible when it is not a drive chain, when it is not a side chain, when it is not a Bitfium thing, or like, when it is done with Taproot, which is, I think, the best upgrade in Bitcoin. And Taproot scripting has enough capabilities that you can actually build a use case specific. Yeah, when you're thinking you're going to like capture the whole scaling narrative, or like scaling L2, sure, but but when you're actually like thinking to solve one use case, which I personally believe is the use case of Bitcoin, or the primary use case of Bitcoin, which is borrowing and lending, which is 10 years old, Taproot has enough in it. And search protocol is an example of what's that extent, what's that limit look like. And you can read about it. It's on our docs. You can inspect the Taproot vault. You can get into the weeds and really see how we have designed it. The different spending path and the unilateral exit that we have introduced, which gives you that flexibility. Like, hey, you know what? So the entire protocol goes down, and my Bitcoin is still safe, and it'll going to come back to me, and I can go and withdraw it without anybody's support. It's just my signature.
Yash, I've got a spicy question for you. It's probably a short answer, but I've got to ask it. So Taproot's been around a long time.
Yep.
Historically hasn't been super utilized, but there's something new that's coming up that's a little controversial, and we're not sure which way it's going to go. But it's this thing called BIP 110.
Yes.
And BIP 110 has basically, like, I'm going to ask you, like, how does our product get affected in the case that a BIP 110 were to pass and move forward and become part of the protocol?
Short answer is, like, our protocol won't be affected by BIP 110 for sure. So the product problem, I think it will definitely affect a lot of other scaling solutions for sure, right? It goes back to the spam argument that, part of the Bitcoin community believes that with all this innovation, it's bringing a lot of spam, right? It's bringing the data that is not relevant to Bitcoin, which is, to an extent, should be finance only. That's a broader opinion. I'm not saying yes or not saying no, right? If you just approach that, okay, sure, now the data. So, but we are not in that category to start with as search protocol.
So
because
if BIP10 were to 110 were to go through or not go through, we're not affected either way.
We are not affected either way. Just to give more insights into like how Surge is under the hood, is we are purely Taproot, right? Which is 340, 340, 341, 342. BIP 340, 341, 342. So we are leveraging Snark signatures. We are leveraging the MAST and the Taproot scripting, and we are not putting any chunk data on, or like any sort of
additional
data on.
And we're not using op-if as well.
Yes, right. It is definitely a problem for those scaling solutions who are really, really pushing this narrative of like, you know what, I'm going to take all that off-chain compute and do all that cryptographically, and then put a little bit on Bitcoin and show that, it's actually Bitcoin, right? I don't know, some would like to believe that it is actually Bitcoin. I don't know how it's Bitcoin, but by just putting that arbitrary data, which Bitcoin doesn't understand, right? Bitcoin scripting doesn't have any capability to understand. Yes, there are some workarounds, but it's still not Bitcoin native in my personal understanding. So that way, we are not affected. We are purely leveraging the Taproot, which has been around. Yes, there are some projects where it's, of course, I think Arc is also using that.
Yeah, there's a
couple of projects
that are out there
we're actually using Taproot, but it will not affect us. But it definitely going to affect the scaling community out there.
Okay.
Yeah. So I would recommend you to go and read our docs and learn more about how we actually doing this Taproot Vault. And it's pretty straightforward and simple. This audit, specifically for Taproot Vaults, we're gonna release the reports and stuff sooner. Will give the community more insights into, or more confidence in this approach of how we have done it. So otherwise, the DCN is, while it sounds like, oh, there's something custody, like distributed custody network, this is the reason why we named the way it is. It is, if you're familiar with Layer 0 or other communication protocols that are there in the DeFi world, which is non-Bitcoin, DeFi, crypto, it's something close to that, which has its own role, which is doing that coordination so that this experience or this use case to function. A very simple way to think about it is there's a custody layer and then there's a lending layer. All right. The custody layer is Taproot Vaults, that is on Bitcoin with unilateral exit. That's a hard guarantee. It's on Bitcoin.
Mm-hmm.
And then there is a lending layer. Where is this lending layer? So which is on Base, which is on Ethereum. The reason we are leveraging that is there's a huge shift in stablecoin infrastructure. And DeFi is not like it was 3 years back. I myself in this space, I'm really blown away with the level of development that has happened. They're really pushing the boundaries. Now it's more institution. Now it's big players getting in like Stripe, building their own, L2 or a chain. There's more stablecoin. Stablecoin makes dollar move faster, and it's no KYC. And I mean I think that's what we need to leverage, right? So what are Bitcoiners choosing right now? They're choosing fiat, which is dollars in their bank account.
Mm-hmm.
Sure, that's slow. That's the first problem, right? This is a user experience problem. The stablecoin solves it. Why not? I think that's something I strongly believe is going to change. It's changed a lot. It's going to change even further, and we're going to see a lot more adoption in stablecoins. And a use case like credit becomes critical, and then I think it's important for our community to kind of look into all this and take the best out of both the worlds.
Yeah, I definitely agree to that. I think what we've designed here is a protocol that really has got the best of all of the technology that's out there today.
Yes,
stablecoin infrastructure that's built on Base, can execute fast, security. And the the security and the security of the Bitcoin blockchain, the transparency of the Bitcoin blockchain, and then we blended it together with our communication layer. That's really the best technology that's out there. And that's what gives the borrowers and the lenders the assurance that funds are safe and secure and can be paid back. People can be made whole. But in the event that the worst case should happen, there's also those unilateral exit guarantees. So I really think this is the most like principled protocol that's out there today.
Yeah. It's I mean, I would not call it a like risk-free yield for stablecoin, but it's close to risk-free asset. I mean, not risk-free asset, it's risk-free market.
Yeah, I would say nothing's risk-free.
Nothing's risk-free. I agree. I just start from the fintech jargons, right? So if you're really thinking from, okay, I have a stable coin, and how do I earn yield on my stable coin? What are some risk-free markets that are out there? I think so. Just Search Protocol is one to look for. We can find this, find more details around this is docs.surge.credit, docs.surge.credit, where we are actually given more insights into the protocol than the app. App is of course available on App Store, both on iOS and Android. And there is earn.surge.credit, which is EARN, earn.surge.credit, which is the dashboard that allows stablecoin holders to come and permissionlessly go and connect their wallet and supply the liquidity. So these are some resources for you to go and catch up on, like how it works and why this is different and how it is aligned to the best of both the worlds, and how we are actually bringing that flexibility and the better user experience for Bitcoiners. Cool. Thank you.
Thanks.